impact investments. I don't know impact asset as investment. What we've been doing. I don't know how much everyone knows about impact assets. So maybe what we and Ritu and I we're going to talk about. Maybe spend 1 or 2 minutes about telling what we do as our in our professional career as our funds, and also talk about what impact asset is about. Uh, so I represent a fund called Omnivore Partners, which is an impact fund focused on investing into food and agriculture technologies, which is focused on improving the profitability of these small Indian farmers, trying to see if agriculture can be made more sustainable, and also about can we reduce the amount of uncertainties we have in the agri sector. Uh, we are in the process of raising a second fund. The first fund was a 260 odd crores. We announced the first close of a second fund recently in January, around 300 crores, and we hope to get the final close by end of the year at 600 crores. Ritu, maybe you want to talk about
We run a fund called Ankur Capital. The fund is focused on very early stage investments, and we actually invest across multiple different sectors. The thesis of the fund is to be investing in what I will call the mass markets of India. So looking at technology and how technology can disrupt, things in tier 3, tier 4 rural markets. And we look across agriculture, health, education, vernacular technology, a range of stuff. We have about 13 investments from this fund. About 60 to 70% of it is in food and ag, and the rest of it is in healthcare. So for example, if I were to give you examples of kind of things we're invested in, and where we feel technology plays a big role. So we're invested into ag tech, where we feel that the ag tech and the penetration of the digitization is actually changing how the farming markets work for both farmers as well as other stakeholders. In healthcare, we are invested in a breast cancer AI company that's bringing a new modality which is non-radiative, non-touch, and extremely, extremely cheap in early stage detection. So this is how we take a look at how technology can be actually disrupting these markets and build the opportunities of tomorrow.
Cool. I mean, so what we're going to talk about, maybe what impact asset is about, right? So when we look at you guys have been investing into various forms of investments, right? Right from equity to maybe structured products, right? Impact as an asset class means something where we're trying to provide a market kind of a returns to invest in a sector which probably has been left out by most of the investors or up to the investments till date. So we really focus on most of the investments really focus on the urban markets, which is representing 25-30% of India as a whole, right? While we tend to focus on maybe the remaining 30-40% is not the bottom 20-30%, but from the 30% to the 70 kind of percentile kind of a market, which has traditionally been left out. Very little investments have happened, and we tend to make investment with the view that there is a potential to make a decent IRR because you tend to come at right valuations. And there's also a potential that you will create a strong positive impact on the society. So we believe that there is an intention to create right returns along with the right kind of matrix. So things like agriculture, health, in the peri-urban areas or in the rural markets have been left alone, right? And there are not many traditional investors, including VCs or PE funds or including mutual funds, doing that. We as a group, as impact investors, tend to focus that. Our take is that as a fund, we believe that why investors should look as impact assets as a class, as a one more source of revenue or avenues to invest. Because if you take a portfolio analysis, right? People do make investments in all kind of subsectors or sectors, but we tend to miss out on food and agri, right? And currently, if you have to make investment in food and agri, the only credible option is to go via land buying out in the agri space. There is not enough exposure around it. So we think impact assets in the agri space can be a subsector because there's a fair chance to make a lot of money. At the same time, there's a chance to make a decent impact on the society. Maybe Ritu, what's your take on about impact assets?
Pretty similar. So I think we sit on, when we are an impact fund, we sit at the intersection of what we think are commercial opportunities. They've been untapped for various different reasons. But at the same time, these opportunities are addressing some pretty, basic or pretty critical structural issues in the Indian ecosystem, and people who perhaps have not quite participated in markets or access services and goods at the same way that perhaps the top 100, 200 million people have. So we're not addressing what I would call the poorest person who, it's not the bottom 100 million, right? We're talking about the 400, 500 million people who still are way behind and still will form part of the growth story going forward. And how do you integrate them faster, create an impact on their lives? So at Ankur, we look at two things. We look at, one, we're not looking at negative impact, right? So we probably will not invest in extractive businesses. We will not invest in businesses that are harmful to society. Parallelly, on the other side, what we do look to invest in is a positive benefit, right? And for us, the positive benefit comes by two ways. The positive impact benefit either comes through structural changes. So for example, if I am to use the agri supply chain here, I'm sure everybody has read in the paper about how much food gets wasted or farmers not getting enough money, right? But there is a structural issue to why some of these things exist. If you don't really develop a appropriate cold chain solution, you don't actually, process food more, it's not really going to go away by just saying, I'm going to make things nice for this particular farmer or do loan waivers. So we look at structural changes as well, right? For example, the breast cancer company that I spoke about earlier. So just about breast, there is no way that mammography or other kinds of testing that has happened in the West is going to go down to the last mile in this country. Doesn't matter what anybody says. We don't have, even if we were super, super rich, we don't have the trained technicians and the resources to make that piece happen. But all of a sudden you have technology which allows one guy to work with 100 guys, and that unlocks, it's a structural change of how healthcare is delivered and will get delivered to the next 500, 800 million people. So that's kind of how we look at the impact and make our selections based on that.
Yeah. One more question I think I would want Ritu to provide input is, a lot of people think impact and philanthropy are nearly same, right? Ritu, maybe I just want to put your thought, what at least for people to understand why it's different.
So we run a business, we run a fund like any other AIF fund, right? The businesses we invest in, at the core of it, are very similar to a lot of other businesses that may or may not fall in that. They need to grow, they need to scale, they need to make profits, they make to make a return. And I think that's the key difference that I would say here, that when you're making an investment, you're looking to actually make a return, right? And you're looking to make a commercial return. Whereas philanthropy is not looking for that return. And how you look at the underlying things that you are investing in, you might call it a philanthropic investment for philanthropy, but what you're looking for are what they call outcomes, which are very different from when you're saying that, look, I'm looking for a financial return along with those outcomes. So that changes the flavor here, I would say.
Sure. I just want to add to one thing on philanthropy versus impact investment. I mean, when you look at philanthropy, there is no post-investment monitoring. You just entrust your money on someone else. Could be an institution, could be a temple, or could be some individual trust to do that job, NGOs to do that. But there is no accountability of what's happening, what kind of investment being made, and what is the positive benefit you guys are getting through it. When you make an impact investment, you're really thinking like an investment, saying what are there are metrics which you measure it. There are returns both in terms of the profits, what you make, or make an IRR for yourself, which can hopefully be reinvested in the impact assets. And what are the positive benefits you're giving to the society? It's probably accounting what good things you are doing, because I think by grace, I mean, you guys are fairly lucky that you got a lot of wealth, right? But at some point, we also want to do it and give it back to society. Impact assets help you to monitor in a better manner.
So maybe Jinesh, if I could add, right? So globally, whether you want to call it impact assets or whether you want to call it socially responsible investing or, just conscious investing, I mean, they're just different terms that are out there. They may focus on different sectors. They may focus on climate. They may focus on, economic issues, upliftment, a variety of different issues, right? But globally, you are seeing more and more money move into these things when you have your TPGs, you have your, Goldman Sachs, raising very, very large amounts of capital that is looking at, saying, I want to make money, but at the same time, I do want to also protect the planet and the people that I live with here. So I think that's somewhere where a lot of this was also coming from.
Guys, this was just a precursor to what impact investing is. I think I would encourage, if you guys have any answer questions to ask, both Ritu and I will try to attempt to answer the same.
Hello, yeah. So sorry, so is ESG a part of impact investing?
So ESG is environmental, social and governance metrics, which is, it's not whether it's impact or not, which is when you do an investment, are you doing things in more environmentally or socially right manner? Are you following the right governance practice? Whether it's an impact investment or a non-impact investment, it's definitely part and parcel what you should logically do in all businesses, because sometimes, at some point of time, if you are not compliant to that, it catches up. In impact investment, it's definitely there because our LPs or our investors do recognize that it's a very critical part of impact investment, and so that's always captured around it.
And I just had one more question.
Please.
That since you all explained that, what is impact, is that it's basically for areas which have been left out, for mainstream investments, whether it is agri or rural. So what has been the track record? Because the very fact that these have been areas which have been left out, meaning that it wouldn't be that easy to commercialize, to convert these into viable business opportunities. So what has been the experience of your funds?
Do you want to take it?
So I look at them as sunrise sectors, right? So they were left out in the past for various different reasons, right? And there are trends on foot, on the ground, that make these investable opportunities today, right? I mean, there still are parts of these sectors which perhaps are not investable, right? But there's chunks and large chunks of it. It's a very, very large industry globally, right? And today there are enough macro factors and things that are changing afoot that make these investable opportunities. In terms of the returns on this thing, I think there are globally, this is not an India issue, right? Globally also people have probably put this on one side and haven't really quite made those investments, though I would say large companies commercially did make these investments. You've seen acquisitions, you've seen very, very large acquisitions happen in this sector, and I think there's just more to come. Yeah.
Look, I mean, just an example, right? Your Equitas and Ujjivan, those are banks which is invested by commercial investors, right? At some point, it was an impact investment, right? There is not that you're doing favor by giving it to poor people. You're creating a business model which probably a large enterprise and the government are unable to do it or incompetent to do that. People with a different mindset is able to create a value out of that, and that's how we look about it.
More or less, what I've heard is it's always agri-tech or anything which has to do with the supply chain. So what about pure play agriculture? And if that's done well, you can, particular entity or company can obviously make 30 to 50% returns. So what about investment into pure play agri?
So I'll tell you, in agri, right, currently what's the big concern in agri? It's not that we are producing less. We're producing more than what we can eat today. We are wasting that. We are producing more. As a result, the farmers are not getting paid more. The terms of trade are so desperately wrong on the side of the traders rather than the farmers, that farmers don't get paid what they should be, right? So issue is, what is the gap today? It's the supply linkages or the linkages with the markets, right? As a VCs, as investors, we prefer to look at problems which are genuinely available, problems which are low hanging, and if I can solve that major issues about market linkages, I think there's a fair chance that we'll be able to give a better terms of trade for the farmers. in terms of pure science agriculture like hybrid seeds and pheromones or any kind of chemical involvement, I think there is research being done around it. But the problem is in all those kind of things, you require 7 or 8 or 9 years of commercialization. If you want to do a seed and make a new seed, it takes 5 to 6 years to get the seed right? You have to get through the processes, and by the time you're in the commercialization, the end of our fund life gets over. So as a VCs, we probably have to make a call where we can really make investments. And what we have seen, where there is a technology which is information-related technology involved in this, where there is market or supply chain technology, the chances of growth are much higher. So that's the reason you're seeing less of pure agri investments in this country.
So did you mean that when you said agriculture, what did you mean? You mean like actually owning land and growing stuff? Is that the kind of thing?
So maybe you won't be able to own land given the regulations, but yes, actually getting into maybe, having an equity stake in a company which is actually leased out land and growing stuff. It could be fruits, grains.
I think the regulatory issues right now to leasing out lands and everything on agri sector.
It's different for different states, so you can still do that.
So I think the one thing that I think, and Jinesh, I'll speak for you as well, that, we're looking for scalability in what we're looking at here, right? So perhaps one of the reasons, and we have seen, and I'm sure Jinesh has also seen, a lot of people who've come to us saying, hey, I'm going to, do farming as a service. I'm going to take off the take these farmers' lands and grow things commercially on it. We just haven't seen the scale on that, and it's been tough. So at least from the Ankur perspective, this is why we haven't quite taken a look at that. And sometimes they've been, the people have wanted to buy the land, which is of course again a capital. I mean, that's not something we would invest in. So.
Just want to add here, I think it's not even profitable right now if there are not enough market linkages. Right? I can produce more today in the same land what you have it. I don't think there's any dearth of land we have it. The problem is that I can't sell in the market at the right price because I just don't have enough infrastructure.
So I think that depends on what it is within that.
Sure, I think it's a specific. I think you're right.
Right. I think it's just perhaps the scalability of it is something that.
Sure.
Yeah, right here at the back, I have a question. Yeah, so what is the time frame with regards to the...
Ankur and Omnivore are created as an AIF fund with a fund life of between 8 to 10 years. It's a close-ended fund. So typically we invest, and it's a holding period of investment is around 5 to 6 years. For us at Omnivore, the majority of the exits are going to happen to strategic players. We just have announced recently 2 of them. One of my company called Mitra has got significant minority investment by Mahindras. Mitra is a is a specialty sprayers company, and Mahindras want to explore the possibility of creating a Mahindra sprayers kind of a business with them. There's a company called Eruwaka, which is in the space of aquaculture IoT, which has got a significant minority investment from a company called Nutrico, which is a Dutch company. Nutrico wants to take this company globally because they believe the kind of solutions what Eruwaka has it is not available globally, and they want to make this their digital arm for Nutrico. So we think as a fund, we're going to see 60-70% of exits happening to strategic players, and 20-30% of exits would happen to a private equity or other financial investors. At the stage what we are coming at seed stage. I don't think IPO is going to happen while we are invested because it's too small while we invest. If we get an IPO, we'll take with a big smile on our face. Yeah. I hope that answers.
I do think SME listing also perhaps down the line is something that some of these guys could go towards.
And what kind of return numbers do these impact investments give over the time frame?
Look, I think the first fund we're tracking a gross IRR in around 28-29%. Net IRR after all the expenses, pre-carry is around 21-22% at this point of time. But yes, we still not got full exits. So this is based on fair market value, which is done by independent agency. God willing, we'll be able to deliver higher returns than what we are doing right now.
And is there a platform for investors to participate in impact investment?
I think India has not seen. It's a new asset class. I think it's last 3-4 years. We're just trying to get few large exits before we think of platform as an industry. What we have is an India Impact Investors Council, where like-minded people who want to make investment in the impact class are coming together and brainstorming at this point of time. We just don't have a platform at this point of time.
Thank you.
I mean, it's an AIF structure, so like minimum you have savvy requirements. I think guys, we're overshooting the time. If you have any questions, we'll be happy to take it offline.